and welcome along to the Property Academy podcast by Opus Partners. I'm your host, Steve McKnight.
And I'm Andrew Nicol.
And today on the show, we're talking about how much discount can you get off your interest rate. When you go into a bank and you see the rates advertised on their billboards and on TV, and then you go and get a mortgage, try and negotiate a bit off. How much can you actually get off? Well, I've dug through the data because we've got a whole heap of mortgage brokers at our team at Opus Mortgages. And I've got the rates, the interest rates that banks are actually giving our investors at the moment. And they are a bit lower than what you see on the billboards. Now, Andrew, when we talk about an interest rate discount, what sort of thing are we talking about?
So I think the main thing is you might see probably online nowadays, people see interest rates or maybe on a billboard or when you go into the bank or maybe on TV, the bank might be offering 7.25% for 1 year fix, but the rate that you'll actually get if you take a loan with them might be closer to 6.99, for example.
So you'd be getting, in that case, about a 0.16% discount. And what sort of discounts are we seeing at the moment, Andrew?
So I think you're seeing a massive range at the moment because a lot of banks haven't brought down their interest rates very quickly over the last wee while, but they've got quite a lot of margin in there, so they're competing, but rather than compete against each other publicly, they're doing it internally. And so, we've seen up to 0.75% discount from some of the interest rates.
Yeah, so for example, there is one bank, and if you guys are watching on YouTube, you guys can see this. For everybody at home, I'll explain it to you. There is one bank that is currently advertising a fixed rate of 7.34% for the 5 year. But if you go in, our mortgage brokers have got 6.59% offered for one of our investors. That's a 0.75% discount. Now, that's pretty high on the high side. But there are some rates that there actually aren't any discounts on at all. So there are a couple of banks that are not discounting their 3-year rates and a couple of them that are not discounting their 4-year rates either. So sometimes you'll get a big discount, sometimes you won't get a big discount. But I'll give you one other example. I've analysed the rates on on average, how much of a discount can you actually get. And for the 1-year rate, the average advertised rate from the 6 big banks, which is ANZ, ASB, Westpac, BNZ, Kiwibank and TSB, average 1-year rate advertised today is 7.37%. But if you go in, the average rate that our mortgage brokers are getting is 6.94%. Now, that is a huge discount, 0.43% off. And if you think about a $500,000 mortgage, 0.43% over a year is savings of about $2,150.
It's a lot of money.
Like, we're talking about $41 a week. If we look at the 2-year rate, there's a bit less of a discount at the moment. Average advertised is 6.86, average offered is 6.8%. So on average, the amount of discount you can get off the 2-year rate is like less than 0.1%, but you can negotiate a lot off the 1-year rate at the moment. One year rate in 6 months, you're getting pretty large discounts at the moment. If you think about the 2-year rate, a 0.06% decrease on a $500,000 mortgage, you're only saving $300 a year off that advertised rate. So $6 a week, not quite as much to write home about.
So on average, we're seeing the highest discounts on the 1-year fixed rate, then jumping to the 6 months and then the 5 years. So the middle term rates, the 2 and the 3 years, not much discounting there. And a big part of that is because they've already been adjusted over the last wee while. So what we see is banks will offer all these discounting, and then what they'll do is they'll publicise their new interest rates with adjusted rates down in this instance. And then if they haven't made changes to the interest rates in a long while, i.e. a lot of them have had the 1-year fixed rate for the last 100 days or so, they'll offer discounting on those ones, but not on the ones that they've discounted recently publicly.
That's correct. And actually, I've got the data to support that as well. So on my screen here, what I've got is the number of days since banks have updated their interest rates. And if you look at the 18-month interest rate, on average, banks have not updated the 18-month interest rate in 115 days. So that's almost 4 months. And so you're getting a pretty good discount off the 18-month rate, about 0.2%. Same with the 1 year and the 6 month. On average, that hasn't been updated in 83 days, almost 3 months. And so we're seeing quite big discounts off the 1 year and the 6 month. If we think about the 2 and the 3 year rate, it's exactly what you said, Andrew. Those have been updated within the last kind of call it a month on average. And so you're seeing quite small discounts off them because the rates have already adjusted. And I don't have the data to prove this over the long term, but I think that would probably be about right. If a bank hasn't updated their interest rate in 3 months or 4 months, then it's more likely that there's going to be some room for negotiation, especially if interest rates are trending down.
Yeah, I think interest rates, banks tend to put them up really, really quickly. And then when they bring them down quite slowly. But the rate that you actually get if you're using a mortgage broker or you're negotiating well is tends to be a lot better if they have sat there and interest rates in the background have come down, like the swap rates have come down. So they've got a bit more margin there.
Yeah, and some of our mortgage brokers have said, oh, it's just because the banks are trying to keep the Reserve Bank happy. The Reserve Bank's still trying to tackle inflation, so maybe the Reserve Bank's got its big stick out and saying to the banks, we want you to keep the 1 year rate really high.
I don't know if I buy into that.
Well, I was about to say that too. That's what I'm hearing from a few mortgage brokers.
Yeah.
I don't believe it. I think it's probably a much more commercial reason.
Yeah.
Here's what I think's happening. You see, the reason I've brought the 2 and the 3 year rates down is because the wholesale interest rates, so what it costs the bank to borrow money and lend it out to you and me, has gone down. But the reason why I don't think they've done it for the 1 year or the 6 months is those shorter term rates, 12 months, 6 months, that depends a lot more on what the Reserve Bank does with the OCR. So if the Reserve Bank brings down the OCR, yep, they can probably come down more quickly. But I think what the banks are doing is they're holding off until they get some more information out of the Reserve Bank, because you've got to remember, it costs money for a bank to change their interest rates. I know Andrew says you don't have that many billboards anymore, but they're going to have to take out new TV ads. They're going to want to publicise that new rate. Maybe they will put up some billboards. They're going to have to get the whole graphics department to create new ads and all of these things. And it actually does cost money for the bank to go out and announce that it's changing its interest rates. And I think they probably don't want to go and spend that money, reduce their 1 year interest rate, and then have the Reserve Bank come out, say, actually, we're keeping the OCR really high, and then they've got to flip-flop and change it back again. It is much cheaper and much easier for the bank to just say, let's just discount the 1 year rate and the 6 month rate by a lot at the moment, effectively giving that interest rate decrease to would-be borrowers without announcing it publicly yet. So I think they're probably just waiting to get the right market signals before they say, yep, we're gonna reduce the rates, we're gonna tell the market we're doing it, we're gonna spend some money to advertise that rate's coming down. So I think they're probably just biding their time, being a bit more cautious, rather than Adrian Orr standing with a cloak in the background with his big stick saying, don't you drop that 1 year rate, otherwise I'll whack you with my stick.
Why do all your fantasies involve Adrian Orr with a stick?
2 of them in this fantasy. I'm sorry, I'm not sure if that's going to make it onto the YouTube or into the podcast. Now, Andrew, main takeaways so far. 1 year rate's the one that's most discounted. In our analysis, most banks are dropping their rate from about 7.37 down to below 7% at the moment. And the longer the rate that has not changed, so the longer that the banks haven't changed the interest rate, the more likely you're expecting to see some amount of discount. Now, one thing that a lot of people might be asking though is, but my mortgage broker didn't get me the interest rates that you're talking about on the show right now.
Yeah, one thing to remember with interest rates is the discounts or the rates that you actually get are completely fluid. And so from day to day, they might change. So you might have got a mortgage out only a few months ago or a few weeks ago, and you might not have got anywhere near this kind of discounting. And that's because that wasn't available then, or it might not have been available for your application. So say, for example, you're a first home buyer, you're borrowing 90%, you're not going to get any of these discounts. If on the other hand, you've got really low debt, really good income, the bank might be a bit more generous with their discounting. So just remember, these are average interest rates and they will change from day to day. And as time goes on, we do expect to see more discounting and more drops over the next wee while, but this doesn't mean that everyone's going to get this exact rate.
Yeah, in fact, I've got a mortgage that is currently fixed at 7.2%, right? Because that was the best rate I could get at that time, and that would have been a couple of months ago when interest rates were still going up. So this is just on what we're seeing today. The chart and the data that I'm looking at comes from the 4th of February. So if you got a mortgage before that, or if you were negotiating with the bank directly, maybe you wouldn't have got these exact same interest rates we're talking about here.
And if you think about things like often banks will have the special interest rate. So I think BNZ is big on the special interest rate or the classic interest rate. So you have to have met certain criteria for that. So for example, you have to have a minimum of 20% equity in your property. You can't have any of the, it used to be that you could get flybys or air points on their mortgages. You couldn't have had those products. Sometimes, again, there will be the no frills offers, but you have to be an owner occupier in some instances. You have to be buying at a certain equity level to be able to qualify for those special rates, and there's no discounting on those.
Yeah, and one last thing I just want to mention before we wrap up is when we say there's some quite big discounts on the 4 and the 5 year rates on average, one thing you just have to remember is that ANZ doesn't have what's called special rates for the 4 and 5 years. And that means that in our analysis, because we're looking at averages, you know, if you go to ASB, you might not get 0.3% off the 5 year rate. That might be the average discount a bank's giving. But because ANZ quite heavily discounts their 4 and 5 year rates anyway, because they don't have a special rate, that can bias those numbers up. So here's how I wouldn't use this analysis. Let's say ASB changes their 1 year rate tomorrow and they decrease it. I wouldn't then go into ASB and say, well, I know that I could get 0.43% off them because that's what those boys on the YouTube told me was the case. Because if they just update it, well, they're not going to give a 0.4% discount. They might not give any discount at all. Same, like, let's say Westpac, I think, has had some pretty good long-term 5 year rates over the last kind of 6 months. Not sure if they're still the lowest. You know, you might not be able to get 0.3% off the 5 year rate with Westpac. So don't think, oh yeah, that's exactly what I should be able to get off. This is just to give you an understanding or an idea, because I know sometimes we'll get comments either in YouTube or emails that say, oh, well, you told me, Ed, that you could get me 0.4% off the 1 year rate and you didn't do it. But then there are lots of things that could change that. So just want you to understand that's a bit fluid. And one thing I do want to mention as well, we were talking about how interest rates that haven't changed in a long time, maybe you can get more discount off there, but it's really hard to find on the internet, well, which banks have most recently changed their interest rates. So I've got some data for you. If you Google like latest interest rate changes OPAs, I'm now tracking this for you and it updates every single day. So I can see that TSB was the latest bank to update their rates. They updated the 2 year rate and they did it on the 29th of January. Before that, it was ASB on the 25th and Westpac on the 19th. And you can see every single rate with when it changed and what it was. And I've even got some graphs showing you what they've been over time. So if you are looking for that data, just want to let you guys know that it is now there and updates every single day. You can even see that, you know, ASB last updated their 1 year interest rate on the 7th of December. It came down 0.06%.
And of course, remember, this is the advertised rate. This isn't necessarily the rate that you're going to get. And this is where using a broker is really useful, because a broker can tell you, hey, banks are advertising this, but we're actually seeing this. And then, actually, based on a larger sample of people, what's likely to be achieved from a discount.
But the reason I wanted to do this episode is I often see, particularly on like property investor Facebook groups, people posting their rates, and it happens constantly. Are these good rates? Are these good rates? And somebody will say, these are the ones that I've got offered on my app. Are these good rates? So I just want to put some numbers around it and say, well, these are the sorts of discounts you might get right now based on what our mortgage brokers are seeing. And I'll hopefully, maybe I'll find a way to get this on the website and keep it always up to date so you can see what sort of interest rates people are actually getting. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. It really does help us get the message out to more people. And hey, if you're listening to the audio version of this podcast and want to see some of the graphs we're talking about on the show, just Google Opus Partners YouTube. It'll be the first thing that comes up. And if you're watching on the YouTube, make sure you hit subscribe because we release new videos every Monday and Wednesday. Thanks for listening to the Property Academy podcast. I'm your host, Steve McKnight.
And I'm Andrew.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the property market. Until next time.